I've changed my question, thanks to my partner Alix here, within the last 30 seconds, because I was going to say, aren't we okay? Because President Trump yesterday said, no, we can wait till September for the wall. And now he's tweeted out, just in the last few minutes, quote, don't let the fake media tell you that I have changed my position on the wall. It will get built and help stop drugs, human trafficking, et cetera. So my question to you is, in this world, how do you even assess a probability of the government being shut down?
Well, I think it's very hard to give a precise probability of anything happening on the policy front when it comes to the Trump administration. I think what's important to understand is that there are risks. And the risk of a government shutdown at this point, I think, is very real. Progress was being made both on the Senate and the House side in terms of finding government funding through the rest of fiscal 2017. But there is a risk that that funding isn't found and that legislation is not passed by the end of this week, which would mark the 100th day in office for the Trump administration. So it'd be quite an interesting element to have a government shutdown on the 100th day in office.
Yeah, I think it might also be the first time ever that a party shut down its own government. Usually there have been Democrats one place and Republicans the others, and they've fought with each other. But are there issues beyond the wall that could keep them from having this continuing resolution go through on Friday?
Well, essentially, progress was being made on both sides of the aisle, and that was quite encouraging. Now, at the end of last week, the administration put forward its own priorities and putting the wall, funding for the wall, into this government funding through the rest of the year. I think that if we do not have government funding by the end of this week, we risk a real economic impact. You mentioned the effect on consumer sentiment, on business sentiment. That's very important. But also macroeconomically, each week of government shutdown removes about 1/10 off of real GDP growth in the second quarter. So it is significant.
So in 2013, though, the markets actually rallied during the government shutdown. Why is this time going to be different?
Well, I think right now we're seeing valuations that are quite high. And in this environment where there is still a lot of policy uncertainty and where essentially investors have banked on policy promises, there's a big risk that if we end up in a government shutdown, that's a sign that the government isn't really able to pass funding through the rest of the year, and that could have a negative effect on private sector confidence.
Also, is there something that we learn about what happens on Friday in terms of tax reform and health care reform?
Well, we might learn something tomorrow. The administration has said that they would have the broad guiding principles in terms of tax reform. I don't think we should expect too much in terms of what will come out tomorrow, actually.
But I meant more like if we do get a government shutdown or they can't agree or it gets really messy on Friday, it's his own party. This is not like 2013 where you had Republicans versus President Obama. So can we then learn that they won't be able to agree and come to the table on tax reform and health care?
I think that's very much the case. I think if we start to see more and more infighting within the Republican Party, that is a sign that it will be extremely difficult to pass anything significant when it comes to tax reform or even just lowering corporate taxes, lowering household taxes. And I think that's very important for the business environment and also for final demand in terms of consumer spending. If these private sector actors do not know with certainty and with clarity what the outcome will be in terms of taxes, they're unlikely to go out and spend like crazy. So we're still going to be in that modest growth economy.
So there is a third way, so to speak, between shutting it down and funding it through the rest of the year, which is a temporary extension.
Yep.
Mick Mulvaney, the director of OMB, has said that in some ways is the most likely result. How will the markets, how will consumers respond to that sort of interim upping of the budget?
Well, I think that wouldn't change much in terms of policymaking in Washington, D.C. You'd still have this last-minute type of deal, last-minute type of agreement in this environment where there continues to be lingering uncertainty on the policy front. If we do have this last-minute agreement on Friday at midnight to extend funding for, say, another week at the current spending levels, then that would give a little bit more time for both parties to agree on funding for the rest of the year. But overall, we're still in this environment where the lack of certainty is really not benefiting the business sector, is really not benefiting the household sector. Investors do bank on policy promises, lower taxes, increased infrastructure spending, deregulation, but business people tend to not do that. Yes, animal spirits are better and people are feeling more optimistic, but they're not yet spending strongly.
Finally, who has the leverage?
I think nobody really has the upper hand. I think that Democrats do have somewhat of an increased leverage over the Republicans, but overall, we know that holding the party hostage, holding the government hostage to government funding is not beneficial. The Republicans learned that the hard way back in 2013, and I think there is no single party that wants to take that risk again, especially with the midterms nearing.
All right, thanks.